Hello everyone, welcome to our new live webinar. It's Monday, June 23rd. I hope that everyone had a wonderful weekend. I was away camping with my son Vit and a few friends. We had some amazing time next to a river, so it was very calm actually. The river had like 25 degrees, so if you're ever here in Slovenia, then try to visit some of the places here around rivers, because we have a very beautiful nature and I'm sure that you will enjoy. Okay, so what's going on the markets? As you know, we are still somehow consolidating, and basically Nivas, we are starting always at 3 p.m. Central European time, which is now. As you know, stocks and overall markets are still somehow consolidating, and if you look at this overlay chart, you can basically see that here crude oil moved to the upside, and when this happened, as you know, after this escalation from 10 days back when Israel attacked Iran, we have seen this push to the upside on energy prices, and since then all of the markets moved into these consolidations that we are seeing so far. And more importantly, dollar has bottomed back then, so we are still here in this kind of a range price action, which I'm afraid can even resume into the summer. So as you know, summer periods also can sometimes be very tricky. I don't see a reason why would someone try to be, let's say, long stocks or gamble here if we consider that there was a pretty nice recovery since April so far. Maybe someone will book the profits, and of course this could keep then maybe stocks a bit neutral in the next few weeks. But overall it's still, I think that at some point even stock market of course will again resume higher. I'm also quite amazed that we are still doing quite well on the stock markets despite this escalation in the Middle East. As you know, US also attacked Iran this weekend, and still we are holding some supports here. So in my opinion, as you know, whenever some good positive news will come out, any kind of just a minor positive hint, and we could be already back at the highs on stocks. But when looking at the US yields, still somehow we are here neutral. I am basically trying to move into this wave count. It's still my alternate wave count, but for now I just think it's the best possible interpretation with the price action that we have. But even this one shows that there can still be missing wave E here, but I don't believe that we will see any kind of a major breakout here in the next few weeks. I just think that unless or until Paul will really make some moves here, this market will be just chopping around. So I'm not sure how much helpful is this interpretation here, but overall on the longer term, if the stocks would really maybe broke to the upside, if we will have some successful trade deals, if maybe economy will try to move into the better shape, then who knows, maybe the US yields will even try to recover. But for now, even if that would be the case at some point in the future, we are still missing this E wave to the downside, meaning that the upside on treasuries can still be retested. Now looking at the S&P wave count. So as I said, stock market obviously is just in a corrective retracement. We came slightly to the downside, not really retested the highs yet here. So in my opinion, obviously there is still further upside here, and the only question is how far this or how deep can be the wave 4. Maybe we'll see wave 4 coming back to the very nice support here if you go back all the way to October of 2024, you can see that that was a very nice strong support, then some resistance here at the end of March, since when we have seen a strong drop based on this tariffs announcement from Trump. Then we broke back above that level, and now we are still looking for some very nice positive trend, which in my opinion will resume. But of course there is a chance that we will see some deeper levels and retest first. There's still a very beautiful gap at this 5,700. Then you have a base channel, also super line, and the 23.6% fib retracement. And there's even a chance that that's a wave 4 of a smaller degree, okay, which I also presented here. And here I'm also comparing the distance of a wave 2 to the current wave 4, and I also came out with the 38.2%, which is right at that gap. So if we see any kind of a sell-off, I just still think that this could be very interesting and very attractive support for potential rebound. So the idea is that after this consolidation is done, which in my opinion is still not the case, because here we can see that this wave 2 was quite deep, and currently we have, if you compare current consolidation with that one from April, you can see that we are basically 42 candles. That's a 4-hour time frame. So we could be we are matching the time period of the previous correction, but we are still not making any deep retracement. But usually wave 4 will be more complex than wave 2, so that's why I'm assuming that there is still a chance that we will see slightly more weakness. But whenever this correction is ready to complete, maybe, who knows, already we surprise the market, and we see push to the upside out of this bull flag already this week. But because we are in consolidation here, and I will expect more upside, I just also think that dollar then could still see a retest of the lows. So I'm just wondering what kind of a formation then dollar is making here. Keep in mind that we are breaking this trend line resistance. Here I'm looking at the 4-hour time frame, quite a lot here. So in my opinion, there is a chance for further upside, for further recovery. Of course, there will be some back and forth moves, especially because now it's Monday, and I don't believe that we'll see any kind of a straight recovery from here. There can be some setbacks, but the idea here is that we broke this trend line, so this can keep us in consolidation for a bit longer. And the idea is also that maybe we are here still in a complex wave 4, or maybe, who knows, I'm wrong and the wave 5 has bottomed here, which is also very possible if we consider potential wedge formation. But the fact is that, as I said earlier, and already last time, we have 5 waves down. We can count 5 waves down into these new lows. So that's now just, it's really unclear to say that we are bottoming, or that maybe here we are in a consolidation and we'll see further weakness, because the easiest part for predicting that drop that we were successful in the last few weeks is behind. Okay, so that's why I'm saying that I'm afraid that we are coming into the period where it will be a bit tricky to recognize the clear patterns, especially now when we also have summer in front of us, and this could definitely keep some tight ranges here on the FX markets. But at least in the short term, even if this is a wave 4, watch out for potential more upside. I think that 100 is a potential very nice resistance here, and then, as you know, wave 4 can be even a triangle, can be a flat. But with this kind of a wave structure, even if we see a sudden break to new lows, I just don't see any kind of a real or a good clear pattern that would allow us to trade the dollar on the short side. Actually, it's most likely the opposite, and that's why I'm saying that maybe the stock market here still will retest lower support levels, while the dollar index can retest higher resistance still. But of course, we will keep tracking these wave counts very closely, especially on the intraday basis for our members, so that we'll try to navigate the next move with much more confidence. But for now, we definitely have a few scenarios here on the list that we will track through the next few weeks. Now, also looking at the euro dollar, we are basically still trading above this upper trend line, lower trend line of this impulse channel. We're not really breaking down yet, but if we break this trend line, okay, this will definitely cause more weakness, either for a way forward that can be more complex then, or maybe into a first leg of a deeper free wave retracement. So watch out this trend line. Again, it has been very late in this bull run, and I'm not surprised that bulls are struggling here. Even if we see a retest of the new highs, still this will be a fifth wave. I'm not sure that there is a lot of room for a recovery here. We are very, very close to resistance. Now, also looking at cable, if you take a look on cable, maybe on the intraday chart, well, notice that we came down from that wedge pattern, okay, an ending diagonal. We broke through that one at the end of last week or mid of last week. Then we retested this line as a resistance, and we have seen another push to the downside. So clearly this has been indication, because that after this rebound, bulls weren't able to hold the gains. So we completely reversed this previous rally. That was maybe the final attempt for bulls that could take us back to the highs, but this scenario failed. And now, since we print the new lows, that's just confirmation that you have 5 waves from the highs. So again, it's another confirmation that most likely we are coming into some period of consolidation. In fact, if you look at the 4-hour time frame here on pound, there's definitely a chance that where you can count 5 waves up with an ending diagonal at the top. You have very nice divergence here on the RSI as well. So that this all suggests that we could be in the middle of this deeper correction. Maybe we'll just retest lower side of this channel, but definitely it's the structure where we should be aware of more downside. In the meantime, 1.3500 could be potential resistance. Now looking at Aussie is also coming lower very nicely. We can see some very sharp moves out of this upward channel. So it suggests that we are in a wave C, potential flat formation. So despite a very strong drop, there's still a very interesting support not being far away from this current market price. So 63.50, I think that's pretty interesting levels. And as I said last time, that if there will be a new dollar bear cycle, I think that there can be very interesting opportunities on commodity currencies. I think that euro pound have made a pretty nice extended leg so far, and if there would be risk on moves that will resume maybe still into the second half of this year, I just think that Aussie and maybe Kiwi could be much more attractive, especially if China-US relations regarding trade deals will be successful. Then I just think that Aussie could make a very nice reversal to the upside. And also, if we take a look, I don't have it open here, at Kiwi as well. I had moving averages, okay. At Kiwi as well, here we are approaching, I believe that's at 100, yes, 100 simple moving averages, and you can also see that we are basically moving into this very nice technical support, okay. So I just think that that's not any kind of a bearish breakdown. In fact, we still didn't even retest the very important and key support. So I think that for this week, around 58.30 or so, this could be a very important level, and I would really not be surprised to see some kind of a rebound, even if that would be just a small rebound and then you see another push to the downside. I still think that this could be some important key level for this week. So even Kiwi, which is looking very weak today, I believe it's coming into very nice support. Looking at dollar CAD, This one came out of an ending diagonal here, but ideally it completed an extended wave 3. I believe that there will be Canadian CPI. I'm not sure if Tuesday or Wednesday. And Bank of Canada, actually members of Bank of Canada, they said that some companies and many businesses expect activity to weaken in the near term. Okay, so of course maybe they will be looking for potential cuts, but it really depends on the CPI print that will be out this week. So if there would be more cuts, of course you can expect that wave 4 will retest higher prices, which makes sense because wave 4 it's a corrective lag, and so far you are still only in wave A of this 3-wave advance. Okay, so I think that there is room for more upside here in the next 2 weeks on dollar CAD. Looking at dollar versus Swiss franc, this one has held the lows here back from April, and even breaking now this trend line within this that is basically in the middle of this range. So this is not any kind of a major breakout, but it just points out that we are most likely in the middle of a more complex wave 4. Okay, so I'm looking now for a potential triangle here. So still we can expect more weakness. Maybe some would say, what if stocks come to the downside and maybe a dollar Swiss franc would rally? Well, if you see any kind of a real sharp risk offs, then, as you know, Swiss franc could be very, very attractive. But whenever we will see Swiss franc printing new highs versus dollar versus euro in particular, Swiss National Bank could be looking to act and maybe even intervene, and this could be a very major and important changer for this trend of the strength of Swiss franc still sometime this year, when I believe that this decline can come to an end and the Swiss franc could actually see a very major reversals later this year. Now looking at dollar yen, interesting, have seen some push to the upside after some sideways price action last week. We broke some key resistance levels, so whenever that's the case, I will go back to the daily charts, higher time frames, and check the structure there, where I still believe that we are in the same wave. It's a triangle here in a wave B. Very important resistance for this week is around 148, but if we start breaking above 148.60, which is short-term invalidation level, then I think there is even room for 151. But still, this will belong to this complex triangle here in a wave B. So it's a bit tricky here. For the near term, could be a bit tricky if we don't hold this 148 for dollar yen. By the way, we are just in the middle of this range, so it's not really a surprise. But if we'll see higher resistance retested, I still think that there will be a chance that we will see a reversal lower to the lower side of the range in the weeks ahead. Now looking at Aussie once again, but this time against the Japanese yen, I still think that this one can be very attractive. I think I covered this in last week, and still basically it didn't change much. We are moving sideways here, very slow, but if you will see any kind of a dip, watch out for the supports around 90. Okay, while the market holds above 86, I think that there can be very interesting opportunity on the long side. Also, you have potential head and shoulder bottom formation as well, and this obviously could go hand in hand with the S&P 500. If the S&P 500 would really come slightly to the downside to retest deeper, much more ideal supports for that fourth wave, as I discussed earlier here, I just think that this could maybe cause another leg to the downside, those cross pairs as well, and bring maybe ASEAN into some very attractive and interesting supports. Now looking at the crude oil, as you know, I've been covering crude oil quite a lot. I even posted a few charts on Twitter as well lately, because it's been very volatile. And last week we said that we see this wave 4 coming very nicely back to this support area. It was also the base channel where we have seen a very nice push to the upside, and now looks like, since we had this gap coming into new highs here on futures, I just think that now it's time for some kind of a pause. It's been US, as you know, that attacked Iran, so that was some kind of a, let's say, scenario that everyone was afraid of, and that's why we have seen this strong push to the upside. But now when this event is behind, it's not a surprise that energy will stabilize, and after 5 waves up we can expect that market will pause into 3 waves. So I just don't believe that we will continue straight to the upside with the same sharp price action. I think that some pause now here is in front of us, and of course we will navigate these markets through our intraday charts, smaller time frames as well for members. So if you're not member yet, make sure to visit us at wavetraders.com and check our services here under member plans. Now also, if you look now on gold, you would think that gold metals in general would be trading much higher based on this escalation in the Middle East, but that's not happening. So when I look back, still we are just in the middle of this recovery on gold, where recent drop clearly has been made by 3 waves. We even stopped at this base channel line within wave 4 retracement. So we are still waiting on new highs to be printed here, but there are a few scenarios on the table, okay, before this may happen. So our primary scenario shows that we could be in ABC flat formation here in a subwave 2, which belongs to this higher degree 5th wave. So in such case, whenever you have a deal with ABC flat corrections, you can expect that wave C will be structured by 5 waves and should then stabilize at the previous wave A, which is here. Okay, so we still aren't at that support levels. That's why I think that you should be very careful with gold. Also, a gold silver ratio is still somehow moving to the downside, despite silver also pulling back. Okay, so in my opinion, there still will be better times to look for potential opportunities here on gold, but either from slightly lower support levels or maybe even after some different formation. Now another interpretation here, okay, if we really would test these lower support levels, then another valid interpretation could be a triangle. Okay, because there is clearly a chance that you count this move to the upside also in 3 waves. So in such case, if that would be a triangle, it's another thing. Okay, it means that again the next few weeks could be very choppy and very slow. So something similar like I've been saying there on the other market. So be careful here on gold, be very patient, maybe that's even more important, but be aware that there can be a support of the low retest of the lower supports before this market may stabilize. But at some point, obviously, I will expect a push to the upside, but unfortunately, even if we are here in a triangle or in a subwave 2, to me the pattern is not looking complete, but it could be quite attractive and interesting if we see a retest of these levels and then we see immediate very sharp reversal back to the previous swing highs here. Now looking at silver, so as I said, gold silver ratio still somehow is pointing to the downside. We came very nicely away down from the 61.8%, so I think that there is a chance for more weakness. But what I would be watching for this week is potential deeper pullback here, okay? Because that was a very sharp drop, and normally when you have this kind of a price action, there is a greater probability that you will see a free wave structure rather than some kind of a sharp wave 4. Of course, sharp wave 4 is also possible, but I just think that whenever it comes to potential discovering and opportunities on the markets, you just have to keep an eye on more simple patterns that will show up more often. So in such case, I'm looking this to be maybe a deeper wave 4, because by the way, we also expect maybe that gold will retest lower levels. So maybe wave 4 could do the same here. But even if we come back towards these levels around 35, I think that this could be quite attractive and interesting support. I also think that there must be a lot of stops here, okay, above this, below that spike from mid of June. Okay, so we still didn't hit that level, and I think that it would be much more easier for silver to continue to the upside if some of the stops, which I believe are placed below that level, would really be taken out. But overall, even if that was some kind of a sharp wave 4 or a flat for a wave 4, or maybe if we'll see a retest of the lower prices, the scenario is the same. We are expecting further upside here on silver as long as we are holding this level above 33.70. But if we start seeing a broken trend line and a daily weekly closes below that levels here around, let's say, below 34.40, that would be the first warning sign that maybe something else is going on here. Now let's take a look on, just a second, I think okay, here it is. Now we will take a look on some of the single stocks. I'm not sure where my list disappeared. Okay, here it is. Okay, so looking at some of the single stocks to give an update from the past few live sessions. Here, looking at Apple, nothing has really changed. Still, we are consolidating, and as I said, longer we consolidate, more powerful can be a breakout. And even then, we have more important personality, which can confirm that the next push should really be to the upside rather than to the downside, if we consider that the reversal from those April lows was very sharp one. Looking at AMD here, also very nice reversal from the lows. We have now clean 5 waves up. So if you're looking for some kind of a short-term trades, don't get too excited up here. I just think that there can be some retracement, and if you'll see one back towards 110, maybe 100 levels, this could be key support to look for potential opportunities on the long side. Also, I'm looking here at Bank of America, and you can see that there was a very nice recovery so far. But it's pretty extended lag. Of course, at some point, I'm still expecting that we will see a new highs. But if we want to discover maybe some opportunities, it's always better to wait on pullbacks. And what I have done is I just compared a few of the previous size of corrections, okay? And I even took the distances of corrections that occurred in the middle of this run through most of the 2024. And looks like that this pullback of around 8 to 10% could be quite attractive for potential opportunities, okay, where obviously you look to buy the stock cheaper. So I think that I'm not sure if this pullback obviously will occur from the current highs, but whenever these pullbacks, this measurement will show up, I think that that's when this one could be very attractive on the long side. So patiently, of course, you should wait on those retracement. And if we go suddenly back to 40, 42, I just think that this could be a very interesting zone. Looking also at eBay, I think we covered this one a few times in the past. We are deeply in this fifth wave, still some room for more upside, but we could be approaching resistance relatively fast here. So just don't be surprised if we will slow down again going into this nvidia, This one still didn't change much since last time. We are just chopping around this 161.8%. We don't know what kind of a form wave 4 will unfold here. Could be a bit of sideways if this market will keep chopping around these levels, or maybe even dip if we see some disappointment in the markets. But any kind of a retracement down towards 130 I think could be quite attractive to look for potential to join the trend here, because we are still obviously attacking and waiting for market to reach new highs. And this at some point, you know, could be even positive for the cryptocurrencies which are also in a pullback as well. Looking at crypto total market cap here, actually I will check all the free crypto total market caps, and you can see that this one obviously still we're not even close to these previous highs. So I'm thinking that there could be more upside. Of course, we have a very nice beautiful free wave retracement here, and maybe now we are very close to a support. But of course, as I said earlier, if stocks will see maybe the S&P 500 another retest of the support levels going into that zone, then of course there can be a very similar deeper retracement as well on this one. But I still think that that's a correction within uptrend. Of course, even this one is also showing the potential retest of the support right now, right here. So I really like the fact that this is happening at the start of the week, this kind of a price action, because that's when everyone are a bit nervous, a bit confused, and just only a few of them, of traders, investors, would really be prepared and ready to take a risk at the start of a new week. Okay, because everyone will just try to be more patient and wait maybe on more news headlines to come out before they really may look at some opportunities in the mid of the week. But now, when there are only a few traders interested, as you know, on the potential rebound right now from here, that's when I really think that there is a chance that basically this is exactly what will happen. Looking at also at this one, it's crypto total market cap that excludes Bitcoin and Ethereum. You can see that this one obviously made a deeper retracement here, but as long as we are holding this channel support, I think that there is a chance that we will rally. We could rally maybe only temporary, but still there can be some opportunities on the altcoins. Even if you look at the Bitcoin dominance here, we are testing the upper side of this wedge line, or ending diagonal if you wish. So maybe the Bitcoin dominance will come down a little bit, and then we will see some flows into some of the altcoins. I mean, Ethereum dominance, this one looks quite interesting and attractive. We have a very nice beautiful rebound, and now we are just pulling back. So I think that there is chance that we will see more upside here. And if you look at the Ethereum itself, I mean, we have very nice 5 waves up, and now we are in a 3 wave retracement. And last time we discussed about this level that is very important, 2100, 2000 figure. It has been a support a few times, then a resistance here in March, and now again potential support. So I think that that's a very beautiful sharp deep correction. Of course, we can still retest this 61.8%, but overall I just think that there is a chance we will stabilize and turn to the upside. The confirmation that we really are going to see more further upside would be if we cross this wave A swing high, because that's where any kind of a bearish impulsive interpretations, okay, would be invalidated, because wave 4 must not tread into territory of a wave A. Also, if you look at the Ethereum from an old school basic perspective, you can see potential head and shoulders. Okay, so that's a left shoulder head, and now you are at the potential support of a right shoulder, where this one is very similar in distance, obviously. So that's a very nice key support, and I really like this method especially when it's going very nicely with the Elliott wave principle, because someone would be looking in such cases for potential head and shoulder bottom formation, even when you have maybe a free wave rise here from within this leg. So that's how you can filter basically good head and shoulders patterns and bad head and shoulders patterns if you're using both methods, Elliott waves with this basic old school technical analysis. Looking also at Bitcoin, what I really like about the Bitcoin and this whole price action is that here, if I hide this for a moment, that here in the middle we had some overlaps. Okay, so these overlaps, because ranges were contracting here, looks like it's a triangle, and if it's a triangle, then we know that this cannot be a wave 2 that will take us much lower for a wave 3 of an impulse. So this is a very important indication that we could be in trying to complete this contra trend movement and that this is a free wave drop. So we basically retested first support that we already discovered last week in our webinar here around 98, 99,000. You still have 93, 94 that could be important if things get a little bit more ugly here in the near term. But the important is that we have here a triangle and that we could really find some support in the near future. Also, regarding our wave counts on a daily chart, there is still a chance that we will either see progress much higher into fifth wave or possibly just into wave C of wave 5 that can be even an ending diagonal. So both wave counts are valid, but whenever we will start printing new highs, don't be blind. Okay, we will definitely keep a very close eye on this one, because if things turns around, you better want to be prepared rather than surprised. Now the final one will be Dash, and the reason why I'm looking at this one is that because this one has been relatively weak. Okay, there's not a lot of interest in Dash, but still, despite being very weak, what we see is that prices are now in a fifth wave. So even this weak coin is now looking for potential stabilization, and I would not be surprised if we will see prices trying to bottom and print and trying to move towards resistance in the second half of this year. And maybe this tells us that other strong coins will still do much better. Traders, I hope that you enjoyed this webinar. If you are interested in more of those analyses, as you know, we cover a lot of those instruments in our members section, so make sure to check this out. Of course, we also cover a lot of altcoins as well that my team is posting on a regular basis. So visit us at wavetraders.com and hope to see you soon in our chat room. Traders, good day and talk to you soon. Bye.